Good morning, all. CamelbackTrading.org coming to you this Monday morning, February 6th. We are looking at Window Traders' market profile of the ES and SPY. And a couple of things. First off, this will be our 24th trading day so far of the new year. If we do gap today, which right now they're looking like they might with 75 minutes to go, it'll be our 14th gap out of 24 trading days. Now, the good majority have not held, but it just shows you the emotional state of trading by short-term traders in these markets. That's number one. Number two, good thing is there's not a lot out this week. Powell is speaking tomorrow, I think at noon, but not a lot of other data out this week besides that. The big tech earnings are out of the way. The Fed's out of the way, at least for now. Of course, you're always going to continually run into this stuff. CPI coming up, Fed minutes, all that. But again, at least for now, not as much. As far as the other ones, I have NQ up now. I'm going to be putting that up in righty as soon as I can get the symbol right. It wasn't working. But here's righty, NQ right now. They're looking to gap, possibly lower. So is IWM. And obviously ES and SPY. Again, not big gaps, but right now it looks like they might be attempting to. This is after Friday with a good push up. It was starting to form a P shape, only to kind of form a B shape late in the day. And now that selling, for now at least, is continuing. Okay? So a game plan for early today's, again, look, that we talk about gaps versus balance and things of that nature. People love to scream gap and go. Well, if you attempted to gap and go so far this year, you've gotten destroyed because even though we've had 13 out of gaps out of 23 days, only a couple have held for the, I think only one gap on each side have held so far. So I'm not saying not to take a short against this gap, but don't just blindly take a trade because, that's what everybody perceives that should be done. So just keep that in mind. Right now, the gap is a little bit over $1 right now. Now, those size gaps, I don't mind those. That's a decent risk reward for a short. Now, if it does gap like that and the overnight's short, if we get any kind of real push up, sometimes I'll change my mind, decide to take a long just to fill the gap. Those are all, leave your options on the table. Okay? If it does fill the gap, then you can look for the short. Any acceptance back into Friday's range, and then value goes from lower to overlap into lower. Okay? But for now, keep all your options on the table. So, a gap of $1 or less, I would be looking most likely to short it, unless we get some really good tempo and volume to the upside. That's okay. Then you could switch and possibly take a long just to fill the gap. We front run overnight highs and overnight lows on a continual basis in ES and SPY. So that's another thing to look for you to push down against the overnight low first. To see if you want to take a long against that. Just remember, you're going to have lower value, most likely a gap, and indices against you. So that's just a responsive play against the overnight low. Not because I think the market would hold and everything's all rosy. Okay, so keep that in mind. In the bigger picture, the monthly is still up. The monthly is an inside month up. Right now, the overnight low in SPY, we got about 30, 40 cents in ES and SPY, basically above last month's high. Buyers would like to hold that. You don't want to have an inside month up like we did early last week in the month and then give it back so quick. So that'll be a very interesting level last month's high. You'd like to hold that. So, again, that's not a bad risk reward long against the overnight low and last month's high. All early plays. And then just quickly on the charts. So here's the monthly. I'm going to call the monthly up for now in the ES and SPY. Last month's high in SPY is 408.16. So that's something you'd like to stay above. Okay. The weekly, right now, healthy. It's one time frame in 5 weeks. At some point, do you want the weekly to come into balance and then resume your upward move? Of course you do. Because look what happens. See the way we had balance here? And we came out of balance up, right? And we one time framed up. Guess what? 5 weeks. At that point, we got up to that trend line and failed. But because you just continually went up and there's poor structure, eventually what happens? Look at that. Gap down, go into balance, and then from balance down to balance, down to the yearly lows. So at some point you'd like to get some kind of balance and come out of balance up instead of coming out of balance down like we did all last year. That was the theme last year, as you can see. Okay? Every push up came back into balance and then down. See that? Up, balance, down. Up, balance, down. So is this going to be different this year? Well, for sure, at least for now, we're over that trend line. So we'll see. And the daily was a 2-day balance. So if we do take out Friday's low, especially on a gap, I will be calling the daily down. Okay? So those are all the things to look for. Our 20 keeps moving up. It'll be over 400 once we open up for trading today. Thanks for the likes and subscribing. Good luck trading today. And we'll recap at 4 p.m.